Hey, what's up everybody? Welcome to my channel SuperStonks. As you might guess by the name, this is a channel about stocks. You wonder, who is this guy? Why is he wearing glasses? Why is this weird 80s kind of logo in the background? Well, I was born in the 80s, so I just thought it was fun. It looks kind of weird. Okay, deal with it. I don't care. I hope that you will like the channel. Basically, what this channel will be about is discussing stocks, investment ideas, and also doing some research on different stocks. What I want to do is share my ideas on different titles, different stocks that might also be helpful for you. So, how did I get to this idea? Well, let me explain. Do you know this guy? Of course, now you do. Because when I was doing research on the GameStop stock, Keith, Deep Fucking Value, Roaring Kitty, however you might want to call him, he was very helpful for me because he dedicated just so much time and starting his own channel, and he was starting with this GameStop workshop 3 times a week, couple of hours, like super big amount of time he put in there, and it was very helpful to me. So I want to say thank you, Keith, because he helped me a lot on challenging my own thought process on the stock. And he also motivated me for now starting my own channel, which still it feels kind of weird, but it's just something that I thought I had to do because it felt to me like I was receiving so much, and now kind of feels bad when you don't give back. At least it feels to me like this. So this is my approach to give something back, to help other people, and also to challenge my own thoughts on different stocks. So yeah, thanks again, Keith. This was very helpful. What I want to show you is the tools that I'm using. Most of the time, my investment approach starts with Guru Focus. It's a platform that I use a lot, especially in the beginning when I'm just creating my long list. Basically, what I would say is I'm investing based on fundamentals, right? So when I'm starting out on researching a stock, I always start with the numbers. If the company is not profitable, or if the company just is loaded with debt, doesn't have a lot of cash, the earnings are bad or weak, it's just something that I don't consider as a stock to invest in, because at the end of the day, stocks are small parts of businesses, and you put your money in there, so you want to make sure that the business you are investing in will be profitable at some point. And if you can't say it, or if the numbers don't support it, it's a red flag for me, and I just dismiss the whole company. Yeah, so this is very helpful because it gives you a lot of information at the first glance. You know, traffic light system, green, yellow, orange, red, whatever. Just a huge amount of very dense information. And what's also very useful is if you're a spreadsheets guy, and if you want to refine your numbers approach, take care of the metrics for yourself and using Microsoft Excel, then there's a plugin and you can just download all of these numbers in an own spreadsheet, do further research, refinement, whatever you might want to call it. It's just very helpful. Of course, it's a paid subscription, and I would say it's I don't consider it too expensive regarding the amount of time that I'm saving by not using a couple of free tools. So this just saves me a huge amount of time. And if you consider $100 a month a lot of money for doing research, where you want to put thousands of dollars or euros into the game, then I mean, what's $100 a month, right? Like, You can't go out at the moment. At least I'm from Germany. In Germany, you're still not allowed to go out into the pub. So once you go out with your friends and enjoy some drinks, then what's 100 euros, right? So there you go. I will consider this a nice investment. What I'm also using now, I didn't use it in the past, is just Reddit. It didn't ever occur to me that this might be a helpful platform for stock research, but it has turned out to just grow rapidly. When I joined Reddit and I watched the Wall Street Bets sub, it had, in January, I think it was 1.5 million users, and now it has 9.5 million. So what I figured out is, wow, group investing or social investing and sharing information is just growing rapidly. To me, it feels kind of unfair because I was studying all this crap, right? I went to university for 7 years studying corporate finance, accounting, and financial engineering, and all of a sudden, everybody's talking about options. Where you had to study for exams just to figure out what's a freaking gamma, what's a freaking beta, what's a rho, like all the Greeks. And now everybody's like 20-year-olds are talking about, oh, did you see the gamma squeeze there? Wow, that's incredible. Like, what the fuck are you talking about? So it's very amazing to me to see just the growth and the improvement of the whole financial literacy. That's just amazing to me, and I'm so happy. This is the best time to be alive if you want to get into investing, because so much information is just shared here. And to be honest, what I was learning at the university and where I put years of my life into a degree, most of it, when you seek a fundamental approach as a stock investor, as a stock picker, you have to forget a lot, because you are trained to be a professional, digging very, very deeply into some specific area that you basically don't need. So this is good stuff. Like, these communities, it's just so good if you're seeking for advice, if you're seeking for good ideas, and also discussing or asking questions, trying to get help to understand what investing is about, what this and that means. You don't have to study anymore. You can buy certain books. You have to establish a fundamental background. You have to understand a balance sheet. You need to know what a profit and loss is. You need to understand margins. You need a certain background, fundamental education on this, but you don't have to get a doctor's degree and dig into some tiny bit of, I don't know, who cares how you calculate gamma to the third digit, right? I mean, it just doesn't make sense. You want to get an understanding of the company and the stock, and where you invest in, and you don't want to be you want to be able to read the most important numbers, but you don't need to study for that. So that's just something I wanted to share, because it really pisses me off that I spent so much time in the libraries, in the books. There you go. It's a good time to be alive. Yeah, what I'm also using, or where I'm sharing information, is stock twits. I like that one a lot. It's a lot of trash talk sometimes, a lot of information that is being shared. There's a lot of noise in there as well as in Reddit. But at the end of the day, you come across some good analysts, some good information that's being shared there. So, you don't want to stop there. Of course, Twitter, that is something that I totally underestimated. Also for getting news anywhere, and also research. tweets on stocks, on the industry, whatever. Sometimes you don't have to go to 5 different websites to get your information. You just have to go to Twitter, enter your stock symbol, and then most of the important links are most likely already shared there. So it's just your one platform that helps you, also combines a lot of information, as I want to say. Marketbeat is something that I use frequently. Most of the time I just check for analyst ratings. It's not that this is something I consider very important for my investment process, but it's kind of something that when you try to establish your touch and feel for the stock, I want to say, you want to see what's the price target from the specialists. You want to, just get a touch of the sentiment that's out there. So if everybody's valuing the stock at 15 and you can buy it at 25, you might want to dig deeper in case you missed something. But in other situations, all the analysts are wrong, and so they can just go suck it. But it's just you wanna. I know it sounds weird, but you wanna establish some sort of relationship with the company you want to invest in, and so this is something that just completes the whole picture, sentiment, whatever you want to call it. There's another platform I'm using because I really like how it's made up, how the data is provided, the colors. It just looks cool and also combines a lot of information in different charts, metrics, ratios, and it also does a valuation. And so I don't really know how to evaluate the data that goes in, how it's processed, what's this metric all about, how serious is it, But at the end of the day, it just helps you to get an overview very, very quickly. And if I see that the stock's undervalued here, this is raising my interest and I want to dig deeper into it. Yeah, it also has a lot of different ratios. It also compares to the industry. It takes into consideration analysts' info and forecasts, gives you an overview over the balance sheet, and so on and so on. So this is something that provides very dense information as well, and also it looks very nice. It doesn't cost that much. You can track your portfolio in there. It's just a nice tool to use. And what I also like are the warning signs, because basically it compares a lot of data from other companies, other industries. If you haven't programmed it yourself, you don't know how reliable it is, but I think you just gotta go with it and make the best of it. But always keep in mind that you need to challenge everything that you encounter and do your own work, right? I mean, that's always important, isn't it? Here comes the boring stuff, the super boring stuff. Like, right, if you have a US company, you want to go into the filings, you go to the Edgar system, and then you can read everything. Of course, there are other platforms that help you or that evaluate all the filings and give you information already prepared. But at the end of the day, you want to look into the filings sometimes. That's important work that you gotta do. At least it seems to me, get back to the origins of the filing and see what's there. Kind of have, I don't know. If you get the filings on a different platforms, there's some kind of trust issues that I have, because you want to look at the original filing. So I don't know. It's just me being loco. Yeah, and this is how it looks. I mean, it doesn't look nice, doesn't look too fancy. It looks like authority paperwork. Super boring. But at some point you wanna check some things out. Like if you invest in a Chinese company, at the moment I'm doing that, and you come across, okay, what's an ADS structure? What's an ADR structure? How is the company set up? Where's the main company? What companies are in the group? Also, what happens, which is discussed right now, if a Chinese company gets delisted in the US stock exchanges, what's happening to your ADRs, right? Does the company buy you out at a ridiculous price? Does it just expire and goes worthless, and you sit there with your piece of paper that is worth nothing? So you want to dig into that, and of course it's boring work. And in some subreddits or on some platforms I've read, oh, if you invest in a Chinese company, ADRs is like owning like toilet paper. I mean, like, no, it's not, because there's a filing that states what it is, and so you gotta read it, right? Anything else is just oversimplified. And if you're not willing to put work in your stock picks, then you shouldn't go into stock picking. Like, why would you do it, right? It's just stupid. I mean, you can't you don't choose the major league with amateur skills. I mean, you get burned. You're playing with dynamite. That's how I feel. And if that's too much risk for you, then, or if it's too boring work for you, then I would say you are entering for yourself uncharted territory, and that can be pretty dangerous. So yeah, do the boring work as well. All right, so basically these platforms are what I'm using. How do I approach my investment process? How does it look? How does it work? Who gives me inspiration? Inspiration, I mean, again, cheers to this guy. Great work what he did, but also you wanna look at the pros that really, to me, explain things that are difficult easily, but very, very fundamental. If you don't know the company or the stock that you invest in, then you are prone to making errors. Like if you are investing in the automobile sector, you need to know that this is a cyclical industry. The stocks go up, the stocks go down, the stocks go up over a couple of years, and you need to know when to get on this boat and when you need to get off the boat, right? You don't wanna buy the stock too late, because then it's going down if you're a long investor, or you want to short the stock at the very peak and then profit when it's going down. I mean, whatever floats your boat and whatever your investing style is, you want to know what you're dealing with. Also, if the stock is a turnaround, if the stock is an asset play, where you have to really, really dig into the balance sheet and do a lot of work in evaluating the assets, right? So, or if it's turnaround stock that got bashed by the news, that made a couple of mistakes, and now the stock price it's just super low. But how do you determine when are you selling? Are you buying more? Does it get back up? I mean, look at GameStop. It was the same. Like, everybody hated the stock. It went down from what, 65 to $2, I think, $2.50, and now it's 160. Like, this is crazy. But if you joined all the investors buying at the bottom, especially in 2020, when you know, okay, it's a cyclical stock, it has had a lot of headwinds. Now it gets a tailwind from the new console cycle. It's gonna be, the numbers will improve, the sales will improve. It has more cash on the balance sheet than the whole market cap at a certain price point, right? So it's just at some point it's so easy to figure out that this is a total no-brainer and you can buy the stock for $5 or $4. And what's the logical price target? I think more. I don't know if it was 30, 50, 150. Like that price, to be honest, ridiculous because it's not worth that much, at least in my opinion. But I bought the first stock at 4, and then I sold a couple of times when I thought it has reached the price where that was my price, my share price, my targeted share price at that time, right? And then I compared how the thesis involved, and then the stock price peaked, it went down, bought a couple more, got off the stock when it hit a new high, and it was kind of a swing trade experience to me, but always keep in mind the thesis, and when the thesis doesn't change and the price gets down, like why don't you just buy more? And when it reaches your price target, you gotta leave, because when that's your price target, everything above, at least it feels to me, is starting gambling, and that's not what I'm doing. I'm trying to invest. So Peter Lynch, a lot of good advice. Peter Lynch, 1994 lecture. This is a must-have. You gotta watch it. It's 1 hour of pure entertainment and investing wisdom. Also, read this book, One Up on Wall Street. It's if you listen to it on the audiobook, it's like 3 hours. 3 hours or 4 hours, totally worth the time. Take half a day off, listen to this book. He explains the 5 different types of stocks: cyclical, turnarounds, asset plays, stalwarts, and fast growers, right? So you know what you're dealing with, and it's just a lot of good advice. Also, beating the street, basically, yeah, there's a lot of overlap in it, but it's just good to, internalizing all of his wisdom, his view at the stock market, at the stocks, at the, how do you say, how you approach the whole investment stuff. And so just listen to it and get it into your heads, into your process. It's just very, very helpful. Learn to Earn, huge masterpiece of just internalizing the whole mental attitude towards not overspending, just trying to have earned more at the end of the day, ending the day with more money than you had when you started the day. It's just not making stupid mistakes, not wasting anything. I think it's very important. If you can have that mindset, then you don't make mistakes. You don't gamble on stocks, because gambling is, I don't know, the term playing the market is just something I don't like. And yeah. So what's next? This is also very, very nice piece of advice here. 50 minutes. I mean, the quality is very bad. It's super old, but it's the legend himself, so I guess it's okay. Yeah, this is a pretty hard video to watch, or very, very psychologic stuff that he's talking about. But I mean, he's very, very smart guy, thinks a lot about of how you should behave, what's a rational approach to investing and a rational approach to life. And he is someone who puts his nose in his own dirt, or however you might call it. Like Charlie Munger, he's a real legend to me, and it's very important that you might want to start working on yourself and building your character and avoiding just stupid mental mistakes. Like, why do you not focus on the bad news, only the good news? Yeah, because you're prone to confirmation bias, which is dangerous. Or just people try to trick themselves into kind of thinking patterns that are comfortable, but you need to take into consideration what's uncomfortable, because that's what might happen if you put a lot of money to a stock and then shit happens, and shit hits the fan. Like, it just gets all over the place and you might lose a lot of money. And especially when the mistake was just because you were tricking yourself into believing something that's actually not true, just because you want to avoid the bad stuff, then this is something you really should watch, and you really need to watch this 3, 4, 5 times and think about it. This one's a classic, the modern, or the latest documentary about Warren Buffett. This is just amazing what he achieved in his life. And also to see at what sacrifice basically he achieved all that, because you want to make sure, when I got interested in stocks, which was like when I was 20 something, you start, who's your role model? And to me it was like, yeah, I want to invest like Warren Buffett because he's such a pro and he's such a great guy. But then you start reading his autobiography or Life's Like a Snowball, or the documentary, then to me at some point it occurred that I'm not at all like this guy. Like, I mean, it's just, what do I like? I like to go out. I like to hang out with friends. I like to interact. I like to be social. I like to drink. I like to drive cars. That's what's fun to me. I mean, to him, it's fun to sit in an office all day. Well, it kind of comes with the job. Also for me to sit in an office most of the day. But I enjoy a beer. I enjoy wine. I enjoy... Sometimes when I earn money, I want to just spend money, right? Like, it's not, to me, it's not a game, acquire money just for the sake of acquiring more money. It's like, I want to make smart decisions, profit from smart decisions, avoid mistakes. But once in a while, when you made a good bet on a stocks that you were comfortable with, and it pays off, then of course you want to treat yourself. Like, that's what I do. And then I like to spend time with my family. I mean, or with my wife. And well, he told his secretary, if my wife calls, you just tell her that I'm not there. I don't have time. Like, had a 3-way relationship. Not my kind of stuff. Not what I'm into, but it works for him. It doesn't have to work for me. And so my approach is probably different mindset on some points, but this man is a fucking genius. So, but you wanna make sure that you find out your own investment approach and what works for you. And this is one very important revelation to me, that first of all, you think you want to be like that person, but then you figure out you want to share some important qualities with that person that are helpful, but you don't actually want to be that person. You got to find your own way. So that was very important for me, very helpful for me, and also kind of hard to kill your idol in some sort of way. Must read. So much wisdom put into the Shareholder Letters from 1977 to 2020. This is also written very, very entertaining. A lot of good lessons, mistakes, and insights by the master himself in these kind of in these letters that are there for free. Like, you can buy them in books, cost you $40, but just click on it, print it out, and there you have it for nothing. Ray Dalio is something or someone that knows a lot, especially about the economy, macroeconomic factors. This is something I don't spend any time on thinking about macro factors. This is just not... I mean, at the end of the day, you have to deal with it. You can't predict it. You can't influence it. they are bigger than your thoughts, and you can control it anyway, so I don't bother with them. But it's a very good video to see how the economy works and what you have to deal with. You can't say when, you can't say how intense it might be, but you know what you can expect and what you will have to deal with. You know, some mechanics that are just there, but you can't influence them, but you know what can happen to you. It's like reading a drug prescription or side effects, right? I mean, you got to deal with it anyway. You got to take the pills, but you might know what to expect in case shit happens. So I regard it that way. So this is nice. This is 30 minutes of very important understanding. Yeah, what else? Yeah, nice book, Laws of Human Nature. This is, to me, I mean, it has 3 parts. It takes almost 11 hours just to listen to it. I'm an audiobook guy. I don't like reading, I admit. It's like small doses are okay, but I'm not the guy who reads 1,200 pages books. I'd rather listen to them. I'm a good listener, I think, and I can process information by listening over and over. So this is a more comfortable way for me. Also, when I'm in the office and I take an hour break, listen to an audiobook. When I'm driving to my clients, 2 hours ride sometimes, you just listen to an audiobook, right? It's not just driving time, is not wasted time. It's learning time. So it works for me. It works very well. And this is a book I would recommend because also a lot of just completes Charlie Munger's misjudgment topics and just a different approach. Yeah, so those are important pieces that I'm consuming. So yeah. I hope this gave you a little understanding of what this channel might be about, what I'm using, what kind of investor I think I am, or I know I am, but if it's the right channel for you, if you want to use the same tools, if you want to watch the same video, listen to the same audiobooks, like, you got to figure out your own style. You got to figure out what works for you, how your approach is. I think everybody wants to make money and not lose money. So I think whatever you watch, you want to watch it from the right angle. You want to know your goals. And you want to just be informed how other people work, what information they share, and if the information that they share makes sense. Or you would say, well, I totally disagree. And maybe give that person feedback. Feel free to comment in the comment section, ask questions, challenge my thoughts. Like, I'm always open for feedback, and I hope I'm gonna get it because it helps me refine my process. So, yeah, you gotta eat what you cook, and I'm always talking about stuff that I think is right, and I'm probably, I don't know that many people, but who put their money where their mouth is. I mean, most of the time, people just want to sound smart and comment everything, even if they know something about or not. That's just not my style. I'm always happy to receive information. I will always challenge information. I will do my research, do my homework. And once I'm telling you that I think this is a good idea, well, it might be a good idea. And if I'm saying I'm invested in a certain type of stock, then I am. But it might totally not be a stock that you should buy. I mean, always take it with a grain of salt, because I can make errors as well. But if I'm convinced, then I put my money where my mouth is. But this channel is not investment advice for you. I mean, oh, right, here's the disclaimer. No investment advice. Do your own homework. Ask your financial advisor. Gotta say it. I don't know. But yeah, just to give you a little hint of what you can expect from my person. Yeah, and also what you can expect from different people, like, let's say, Michael Burry. This is awesome in Guru Focus because you can open up portfolios of different investors. So if you watched this whole video and stayed until the end, this is a cool feature I should have mentioned earlier. But here you can see Michael Burry's portfolio. And that's basically where I found GameStop, because coattail riding is nothing I'm ashamed of. I mean, this guy is sitting in front of his screen and doing research day in and day out. So why not? I mean, he's a smart dude. So sometimes I'm just going into the portfolios and see what he's got. If I like some companies, if those are companies I understand. And then you also see new holding or sold out. Here he sold out in GameStop a couple of months ago. He profited quite well, but he's out. And what's his new holdings? Wow, what's Wells Fargo? I mean, yeah, it's a bank. I think there are better banks out there, but that's just my opinion. But you can go to Wells Fargo and see how they are doing. And then you're back to my research process. So this is cool. Yeah, so I hope that you find it interesting what this channel might offer you. We will go deeper into single stocks in the following episodes. But I hope that you tune in once in a while. We can share ideas. I don't care if we end up with just 50 people or 50,000 people. This is just something I want to do. If you come across the stream or the video or my channel, I'm very happy. I'm always happy for feedback. You've seen my name. It's Stonks Trader. That's the name I use in different social media channels. StockTwits, Twitter, Stonks Trader, Stonks Trader 84. That's me. Probably. Just feel free to contact me anytime, and always happy for some interesting exchange of information, discussing ideas. If it helps you, if you have some added value from my videos to your investment process or to stock ideas, goal achieved, I think. So thank you very much. Take care and hope to see you around very soon.